Hello there and welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading. I'm joined by Mark Oswald, the strategist at ADM Investor Services. How are you today, Mark?
I'm very well, thank you.
Right, a little bit on the quiet side, waiting for US data this afternoon. What are the highlights at the moment for you?
I think it's that actually there's a certain, well, the central bank narrative is clearly jarring markets, and there's been an element of uncertainty injected both by the Fed, the ECB, and the Bank of England. On the other side of the coin, you've got this situation where one would expect in that situation where there are slightly less accommodative noises coming out of those three, that you might hear something from the BoJ, and instead from the BoJ you're hearing that again they are going to fail to hit their CPI target. The government indeed this morning updated its economic forecasts for Japan, and it still only sees CPI peaking at 1.3%, way off the 2% target. So thus far, Abenomics is not really delivering on that side.
What a surprise. Let's go on to the trending topics of the day. Euro-dollar supported by ECB tapered comments, I believe.
Yes, this was the story that we had yesterday. Ironically, there were two stories running almost at the same time. The Wall Street Journal suggested the ECB will announce its tapering plans in September. And on the other hand, we had the head of the Latvian Central Bank, Mr. Rimcevic, saying, well, we'll probably be doing QE for a couple more years. So how you marry those two particular headlines up, I'm not really quite sure, but it creates a bit of volatility.
Right, we've seen the volatility yesterday, but we can only dream of that sort of volatility today. We're sort of stuck around 114 to 114.20 at the moment.
Yes, and I think really it's going to be dependent on what happens with the US data that we've got today, of how that plays out. It does feel like the market, this up move in the euro is starting to tire, and I think that the bigger risk at the moment is the market's calling ECB tapering tightening policy, and really it's just being slightly less accommodative. You're still in that situation where, with the Fed on its current target, current course, that there's going to be a widening of rate differentials between the US and Europe in favor of the US.
Okay, let's go on to dollar yen, which you mentioned briefly. That ranging as BoJ admits delay in hitting inflation goal.
Yes, I think the yen has benefited a lot over the first half of the year from the fact that it was the safe haven of choice. Now, with the BoJ looking like the last one to stop its QE program, the vulnerabilities are on the upside, but we keep on getting these differentiated noises, and we've got people like Mr. Sakurai, who was on the BoJ board, talking about implicit tapering from the BoJ, which is something really quite amusing as a concept.
Okay. And finally, pound unstable on Brexit jitters all over the place, I think, at the moment in terms of Great Britain PLC.
Yes, it's not only, it's a combination of Brexit jitters to do with the government seemingly having very, very confused policies on how to manage the Brexit progress, but it's also, on the other side of the coin, the Bank of England sending completely conflicting messages about whether it is going to tighten policy, whether it is going to respond to, not, at the moment, not quite out of target range, but certainly above target inflation rates, even though the signs from the economy at the moment are really unhealthy. We are seeing all this uncertainty in the political arena are actually starting to hit home in the economy. Both business sentiment and consumer sentiment definitely taking quite a sharp hit.
But at the same time, pound near to 130.
Yes, the pound near to 130, largely due to those conflicting signals from the Bank of England. And I think largely because people are, this is as much dollar weakness as it is sterling strength, if one wanted to call that. It still doesn't really look like it's got the momentum to make a decisive break above 130 in a bit.
Okay, let's go on to the trade of the day. Double top on dollar yen around 114.35. Seem to have capped the movement of the pair for now. Possible head and shoulders formation with the left shoulder and head formed, waiting on the right one now. Medium strong bullish signal from the Ichimoku Kinku Haiyu. It's a new one. The latter bits are new to me, the Kinku and the Haiyu. Indicator back in June seemed to have run its course, and a possible reversion could be starting. Multi-day trade of sell on 112.90, take profit around 111.25, with partial take profit around 111.65. Stop loss around 113.60, which is relatively obvious, and risk-reward ratio 2.07. But I mean, I think the way the cross is moving at the moment, you can only dream of a move of 1 yen to the downside, upside, or any other way.
Yes, in most currencies, you're actually dreaming sort of one big figure moves. On most of these currencies are fairly improbable. I think to trigger that move, the question is, what are you going to get fundamentally in terms of news to actually trigger that? And it would seem to be some form of political risk materializing, whether it's related to Mr. Trump or whether it's related to tensions in Europe. That's, I think, what you would need to get to reverse this recent period of yen weakness. So it's looking around for what would be the actual trigger for that.
But you're almost selling 112.80 and buying 113.60 or 70,
Yes,
aren't you?
indeed.
Just waiting for
Yep.
hoping that the momentum will keep going.
Yeah.
Trading positions, here we see this is an amalgam of not only retail investors but banks and other institutions who should know what they're doing sometimes. So they're long of euro dollar, cable and dollar yen, which seems to be intuitive and doesn't sound too painful. Short of dollar Swiss and dollar Canadian, which I suppose being short of dollar Canadian in recent past has been not a bad idea.
No. Certainly not, and the Bank of Canada delivering where others haven't actually delivered anything yet, and that's probably the thing which gives it support. In addition to the fact that obviously if oil prices were to recover a little bit further, then that would be also supportive, as well as the good news on the economy and the tighter Bank of Canada policy.
So while we were complaining about lack of movement, there was certainly enough for everyone the other day, a couple of days ago.
Yes, when the Bank of Canada did actually deliver on its rate hike. I was actually surprised by the scale of that move, given that the tightening move had been really, really very well signalled. So it looks like in the first instance, someone obviously placed some quite tight stops, and someone went after it. The stop hunters went after them to see how far they could pressure them. Obviously quite far.
That was quite nasty. And then going back to, we got short of the Aussie dollar, which seems to be could be a bit painful now.
Yes, I think here the key factor is as much as the Reserve Bank of Australia doesn't sound like it's joining in with everybody else, in this risk-on environment and with recovery in some of the industrial metals and oil, there is this carry into Australia, even though their rates aren't particularly high by historical standards, which very much attracts people.
No, it's been a very beautiful move to the upside there.
Absolutely, yeah.
Then finally, euro sterling, where people are long. Presumably, they were long into the Bank of England, Mr. Broadbent's help for the cross, but obviously we have pulled back since then, haven't we?
We certainly have, and I still think we're probably in a fairly tight range for the moment, depending on how what sort of divergences are we going to get between Bank of England and ECB policy. Is the Bank of England really going to be that much further ahead of the ECB, or, as the market's currently discounting, is it really only going to be probably tightening policy at the same time as the ECB? It's a big question.
That magic number 88 pence at the moment.
Fairly strong support there.
Yes. And to finish off with the economic calendar, retail sales, consumer price index, industrial production, big numbers.
All big numbers, all being released on the same day. Retail sales were certainly the market sensitive too. They want to see that the core retail sales are still continuing to expand at a decent pace, underlining that the US consumers recovered from its weakness in consumer spending in Q1. Inflation numbers, on the other hand, will lean a little bit against that, given that at the moment it does look very much like inflation is going to be lower than the Fed would have wanted for quite a protracted period, even if there are a number of special factors on that front. Industrial production, probably some upside risks there, given the strength that we've seen in recent manufacturing surveys.
Mark Oswald, strategist at ADM Investor Services. Thank you very much for coming in today. That's it for FX Street. Currencies in Play, brought to you by Royal Financial Trading.